Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 24th of June, 2021. Alright everyone, let's get right into it. So, just a heads up here, this week, this Saturday, the 26th of June, I am doing another AMA in the Discord's voice channel. So, if you're on at that time, 11 PM Australian Eastern Standard Time, 3 PM Central Eastern Standard Time in Europe, 9 AM EDT, Eastern US, 6 AM Pacific. So sorry for the West Coast US. Unfortunately, that's just the best time that I can come up with that would accommodate everyone across the world. But never fear, this is going to be recorded. It'll be uploaded to YouTube later on, so you can come and kind of listen to it. So if you do want to get your questions answered, but you can't attend, just drop your questions into the AMA series channel on the Discord. And you can join the Discord by using the link in the YouTube description below. But I hope to see you all there, as much as as many of you as possible. I think it's going to be a really fun AMA, and I'm really excited for it. So I mentioned yesterday that there was an AMA that went on Ethereum from the Ethereum Foundation's research team here, and I said I was going to summarize it, but I came across this post on the ethfinance subreddit just before, and it basically summarized the most interesting kind of questions and answers from the AMA. So it's quite a lengthy kind of post here with links to all the questions and answers. But I suggest going and giving this a read. It'll be linked in the YouTube description, of course. But it has basically, all of the, meat of the AMA. Now, I read through the whole AMA, read through all the different comments and things like that. It was absolutely amazing. I mean, there is just so much to look forward to in Ethereum beyond the next 12 to 18 months. Like I spoke yesterday about how the next 12 to 18 months is going to be really cool in the Ethereum ecosystem. But I mean, the Ethereum Foundation researchers, they're just thinking so far ahead. They're thinking at least 5 to 10 years ahead from where we are today and what upgrades we can bring to the protocol beyond kind of sharding. Because I guess after the merge happens, sharding and statelessness are the two kind of major things after that. But then beyond that, what can we do? Well, one basic thing we're going to be doing is hopefully adding more shards, more than the 64 shards to get more scalability. We can do things like snarkifying the base layer, which is essentially a fancy way of saying we can do some really cool things with cryptography at the base layer here. We can do things with validators. Justin Drake's been working on verifiable delay functions for a while now. That's basically introducing true randomness into the beacon chain, which means we could actually, from my understanding, we could potentially make it so that with our MEV is much less of a problem because we could randomly order transactions within a block without the validators actually knowing what transactions are in there. And there's commit reveal schemes for that sort of stuff as well. I mean, there is so much meat here. It's just, it really is insane. And I mean, the details that the answers that the researchers gave were very detailed. So I highly recommend going and reading the whole AMA. But if you just want a summary, then this post will get you there. So definitely go check this out. I'll link this in the YouTube description below. So EIP-1559 is now live on its first testnet, Ropsten. So actually, technically, the London network upgrade is now live, which includes a bunch of different EIPs, but obviously 1559 is the star of the show there. So that is live as of today, and the next testnet to fork will be going forward in a week, and then another one a week after that. So I think Gurley in a week, and then Kovan, I believe, or Rinkeby probably the week after. And then if all the testnets go well, we'll get a mainnet kind of fork date from there. Now, what's really cool is this Watch the Burn website has been updated and now supports the Ropsten testnet. So you can actually see how much ETH is being burned on this testnet. So almost 800 ETH at that time of recording here has been burned. And this is just, I guess, maybe about 12 hours worth of blocks so far. And this is just on the testnet, which is really cool. So you can click through to different blocks and you can actually see the breakdown here of how much kind of, what the block reward was, the base fee, how much in Gwei, and then how much Gwei was burned as well. So you can see the amount that's burned here. So just a kind of a basic kind of breakdown of blocks. But this is real time, by the way. Every time a block is processed, this gets updated and shows you the total amount of fees burned. And, Ropsten is here, and then there's going to be support for Gurley and Rinkeby when those get activated, and of course mainnet. I mean, this site is probably going to be my, the site that I check pretty much probably every day once 1559 is on mainnet, and I'm going to be posting so many screenshots of it to Twitter and things like that, because I really want people to just kind of see like kind of like that it's working, right? The ETH is being burned, and we're doing what we're kind of like set out to do. But also I'm really interested to see kind of, I guess, maybe a site can be created that compares the old transaction fee mechanism to the new one, so pre 1559 to post 1559, and to see how much we're saving users in terms of like fee overpayment. Because I've discussed this before on the refuel, and I've said that users tend to overpay on fees a lot because of the fact that fees can move from underneath you when you've put like a transaction in, and you may want to speed it up, so you end up overpaying. Whereas with 1559, that pretty much kind of eliminates most of that problem, and also guarantees that your transaction will get into the next block or so. So I would love to see the comparison between how much overpayment there was pre 1559 and all those sorts of things. But still, this is a really, really amazing site here. Kudos to, I think, Mohammed, is the guy who made it. His Twitter's linked here down the bottom. I think he made it with another person as well, and it's open source and everything. And there's a Gitcoin grant too for them. So if you haven't donated to them yet, or anyone on Gitcoin yet, get on that, by the way. You haven't got much more time. Actually, you do. I'm joking. You have like a week. But still, do it now, because I'm going to keep reminding you, and once you do it, you feel better about yourself. But anyway, go donate to all the Gitcoin grants. And there's another tweet here from Tobby Kitty, who basically just reiterated the fact that the the proof of work issuance and proof of stake issuance is very different. Now, the reason I want to talk about this is because it ties into 1559, and it ties into something that I tweeted out today about how 1559 isn't going to make ETH net deflationary during proof of work unless Gwei is over 100. Actually, I'm going to try and find this tweet quickly that I put out. I responded to Aaron. I remember, if I just kind of find it here. Here. So I basically said my napkin math says that with proof of work at current issuance rate, which is 4.5% a year, give or take, a couple of basis points there. It says that with proof of work, we need 100 Gwei consistently to see a deflationary ETH, which means that we would need gas fees to be at 100 Gwei as the floor or higher for ETH to be net deflationary. And by net deflationary, I mean burning more ETH than what we're issuing per year, so for the whole year, not just for spurts of the year, because obviously there's times for like, a day or a couple days, or during like the mania a couple months ago, where more ETH would get burned because of that. We're at 100 Gwei already. So, if we kind of like consider all of that together, then ETH is not going to be net deflationary with proof of work. But where this gets really interesting, and what people are talking about when they kind of mention, ETH being net deflationary, it's with proof of stake. So kind of post the merge. So once the ETH1 to ETH2 merge happens, we're obviously going to have, much less issuance, because we're just going to get rid of proof of work, and we're going to go be just on proof of stake, which means that based on my napkin math, again, this is not exact numbers or anything, but we would only need 10 Gwei consistently, which is what we have today, right? Like, we have it during a very quiet period, and this is before roll-ups kind of roll out in a big way and start kind of consuming block space. This is during, a time where we also have like flash bots, which kind of, I guess, so with flash bots as it currently stands, and with, like transactions being able to be done outside the public mempool, it kind of gives like a false sense of measurement on Gwei, because these transactions aren't currently measured by like the, the measurements that we use to measure fee payments, but post 1559, some of that will happen in the base fee, and regardless of kind of like if using flash bots, if you're using the public mempool or anything like that. So that will kind of get factored in then. But anyway, 10 Gwei consistently and net deflationary ETH post-merge with 1559, of course, which is really, really cool. So I just wanted to kind of set some expectations there that, yes, 1559 is super exciting. We're all extremely excited about it, obviously, but don't kind of be disappointed if ETH isn't net deflationary post-1559. If the market heats up again and we go to consistently 100 Gwei plus again, then sure. I mean, it's going to be really cool to just be able to say, we issued this much ETH today and this is how much we burned, so we were actually deflationary for that day or this day or that day. But that didn't even last a year. If you kind of take the last year and kind of like map out what the gas prices were. They varied a lot, and they were definitely not 100 Gwei consistently for that whole year. So we would not have been net deflationary even during that kind of mania there. So in proof of work, but in proof of stake, if we had 100 Gwei consistently in a proof of stake world, we would be way more than just like net deflation. We would be like, I don't know what the math is right now, but essentially it's like 10 times the amount of kind of ETH being burned after the net deflationary aspect kicks in. So very, very cool once you think about the implications. But anyway, just wanted to kind of explain that and make sure people aren't caught offside when 1559 goes live and they're expecting it to burn all the ETH, when it will burn a lot of ETH, but it won't burn enough to make ETH deflationary in proof of work. So Kris Kay put out an interesting tweet today, and I've spoken about like ETH's use as a settlement layer a lot before, but basically he compared PayPal and Ethereum. So PayPal in 2020 settled $936 billion in payments for the entirety of 2020, whereas Ethereum in 2021 settled this same amount in just 17 days. Now, given this was the peak of the bull market, right, May 1st to May 17th, but doesn't matter because Ethereum just doing this in 17 days and PayPal doing this in 365 days is an absolutely crazy difference. And I think, again, this is what a lot of people are missing, is that every single one of these transactions that settled value on Ethereum paid fees. Every single one. Even if they went through flashbots, even if they went through other dark pools, they still paid fees to Ethereum. Now, obviously, with flashbots, they go around Ethereum. They don't pay it to the protocol. They pay it to the miners directly. But as I said, with 1559, there's still going to be a little bit of that fee paid, or like maybe even a healthy chunk of that fee paid to the Ethereum protocol, regardless of flashbots use or whatever. So if you extrapolate this out, and you think, okay, well, Ethereum is the greatest settlement layer we've ever invented in the history of humanity, and I don't think that's far-fetched to say that, because PayPal is an absolutely massive company, and I doubt most things are doing more settlement value than Ethereum is right now. I think Ethereum might be behind things like Visa still in settlement value, and maybe like Fedwire and stuff like that, and some bank stuff, but most fintech is definitely getting beaten out in settlement value by Ethereum, and Ethereum is still extremely young, and it still has like problems with scalability and all that sort of stuff. So, taking all that into account, let's imagine let's imagine a time in 5 years when we've scaled nicely via layer 2s and other means. We have 1559 in full swing. The base layer fees are being just paid by rollups and things like that. And Ethereum, the network, is settling, the layer 1 network, if you extrapolate the value that it's settling, in terms of what's happening on layer 2, it could potentially be settling hundreds of trillions of dollars a year on that kind of like base layer. Well, the settlements, I guess, the transactions and value would happen within layer 2, but then the layer 2 proof would get settled on layer 1. So you'd have to basically deconstruct the proof and just kind of like look into how much value was in that one proof, and then you could extrapolate it out. But that can be done. So let's say it's hundreds of trillions of value being settled there. That is absolutely insane, because it means that the fees for that kind of value being settled will probably be quite high on layer 1. Now, end users aren't going to have to suffer through those fees. The layer 2 rollups and things like that are going to be happy to pay those fees, and then because we'll be obviously in a 1559 world, that's going to be being burned. So, and we're going to be post-merge as well, with just on full proof of stake. I really do think, and this is an old saying, but I think it applies to crypto especially, and especially Ethereum, is that humans tend to put way more emphasis on the short term and don't really put much emphasis on the long term. And this goes back to what I was saying about recency bias, but I think this is a bit different to that, where we, for some reason, I suffer from it too, we just cannot see very far into the future. And those who do are the ones that are considered, true visionaries and things like that. As I was saying before, the Ethereum Foundation researchers are thinking 5 to 10 years into the future of Ethereum, and thinking of like the most advanced stuff that won't come to fruition until maybe 10 years down the line, but they're thinking about it now. So those kinds of people are the visionaries. They are the ones who kind of like build this sort of stuff and get us, and allow humanity to progress. But I don't think it should just be kind of, I guess, like limited to them. I'm pretty sure, like, myself and others, watching the refuel right now, I hope all of you kind of can see further than even like a year. I think a year is an eternity in crypto, but it's still it can still be considered short term if your outlook is decades. So, and obviously, like, just thinking a couple months ahead, well, that's just like, I guess, I guess like really short-sighted, and I also think that this doesn't just apply to price, this applies to fundamental developments as well. So Ethereum in 5 years is going to be absolutely crazy, amazing. I mean, I can't even imagine how crazy it's going to be, and we're going to look back at these times and be like, why were we ever like bearish? I mean, there's some people out there that are bearish on Ethereum, obviously, and I'm just going to kind of like keep kind of reminding them in my own little way. It's like, why are you bearish? Why are you bearish, guys? Like, there's no reason to be bearish. So anyway, I thought this was a cool tweet from Kris Kay to kind of put into context just how big Ethereum is and just how big it's going to get. So a16z have announced their new crypto venture fund that has $2.2 billion worth of funds in it. This is absolutely massive. Their largest crypto fund to date. I saw someone do a breakdown before of this is their third crypto fund. Of the other two funds that they have were much smaller than this. But this is cool because if the market, as I've said before, if the market goes into kind of like a bear market or a downtrend for many, many months out there, it's not going to matter for the builders because these kind of funds have already closed and kind of like gotten funds into them from limited partners or LPs as they're called. A16Z isn't the only one. There's plenty of others out there that have raised money recently, and there's lots of teams that have raised money recently as part of a seed round or a Series A round, which gives them plenty of ammo for anywhere from like 1 to 5 years in terms of like development, whether that was a seed stage or a Series A. And if they're succeeding, they're going to go on to raise even more money, and that'll be easy to come by because all of these funds are flush with cash. Now, and the one thing that's important about these funds for people who don't know is that they can't sit on this money. They have to invest it. That's part of what their agreement is with their limited partners, is that this cash is going to be invested in crypto projects. So you might think, oh, well, these funds are like us. They FOMO into things. Well, I mean, yes and no. I mean, I think the reason they raise so much money is because people are FOMOing, but at the same time, that money's getting deployed, whether it's a bear market or a bull market. It doesn't matter now. That money has been raised. It's got to get deployed. I mean, it can get returned to investors, but usually it doesn't in any big way. Usually it just gets deployed. Now, I'm curious to see what a16z fund. They seem to fund a lot of different things, and they've got they've got a pretty sizable portfolio on the crypto side now. But I don't think it really matters. I mean, the more projects that we fund, the more kind of ideas that we fund, especially ones on Ethereum, not just, I mean, there's some kind of pointless things that get funded, but that's always going to happen. But the more of that kind of happens, the better it is, I think, a net for the ecosystem. And I'm really excited to see that there's $2.2 billion in just one fund up for grabs for crypto entrepreneurs here. So mStable is teasing a bunch of new kind of developments coming up in their current development sprint. So there's going to be new MUSD feeder pools on Polygon for Frax and ALUSD here. The mETH spec and MIP is coming up. So MIP stands for mStable Improvement Proposal. The staking V2 spec as well with an MIP. Rari Capital Fuse pool for MUSD, I believe, and a pool together integration and more as they're teasing here. So yeah, lots of exciting stuff coming for mStable, and I mean, disclosure, I'm an advisor, invest in mStable, but I actually wanted to mention one more thing about mStable is that the yields in DeFi right now have been dropping. Stablecoin yields in particular have been dropping pretty badly, but on mStable you can currently get non-token subsidized yield of around 8 to 10% on your dollars, on your MUSD. So definitely go check them out if that's something you're interested in. It was funny, we're having this discussion in the Discord the other day. It's like there's kind of these two camps, I guess, of people within crypto. It's like the passive investor versus the active investor, but I don't think they have to be kind of mutually exclusive. I think you can do both. I think you can have like, say 10 to 20% of your portfolio, maybe more if you expect the market to be bearish, in stables, just earning a yield somewhere. Whereas you can have, and then you can have like, say 80% of your portfolio in volatile assets still, such as ETH. And I was saying that basically the way I look at it is that I don't really hold stable coins. I mean, one reason is because there's no AUD stablecoin. I don't want to expose myself to currency risk. But even if there was, I wouldn't really hold too much of my kind of like portfolio in stablecoins, because I would rather hold ETH and I would rather stake my ETH. And yes, okay, the APY in staking or APY is 6.5%, so it's not super high, but that's 6.5% that's ETH denominated. So if ETH goes up in value, which I expect it does, then I'm able to stack more ETH, and that 6.5% APR, as I said, is ETH denominated. So if you dollar denominate it, it actually becomes a lot more if you adjust for the price going up. Now, of course, the price can go down or whatever, but the way I plan to kind of stake is that I plan to stake my ETH kind of like forever, essentially. And whatever I earn in staking rewards, I obviously have to pay tax on it and things like that. But net of tax, like if I need it for living expenses, I can use that to kind of like fund myself. But essentially, if I stake for like 5 years and it was say the APR for 5 years average was like 10%, just as a ballpark figure here, well, then I'd have to factor in the fact that ETH has gone up in value over those 5 years, because I strongly believe that it will, which means my API is probably a lot more than 10%, taking that into account. I know it's not the right way to kind of calculate it, but that's how I think about it. But that's not to say that you shouldn't, take advantage of stablecoin farms, and you shouldn't kind of like hold some assets in stablecoins. I mean, using Ethereum as a savings account is incredibly cool, especially for those who are happy holding USD. You can essentially, even use your. I mean, if you're happy taking the risk, for any tax money that you owe, you can use to farm as well. And now I don't suggest this. I'm not recommending this, but I know people who do this, where they'll have a lot of USD that they're setting aside for tax. Instead of just sitting in a bank account earning basically nothing, they put it into some kind of like yield farm on DeFi. And I actually think mStable is pretty good here, because it's a low risk USD kind of yield farm. But generally, yeah, I mean, obviously do your due diligence. There's risk there and things like that. And risking your tax money is probably never a good idea. But I know people who do it. And if you're comfortable with the risk, well, then, more power to you. But anyway, I'll leave it at that for now. Just really exciting things coming out of mStable going forward. So Anywsap has partnered with Arbitrum. So for those who don't know, Anywsap is a protocol for bridging assets between different layer 1s and layer 2s, similar to Hot Protocol and Connext, of course. So they've partnered with Arbitrum, obviously, to be able to do transfers across like Arbitrum and different layer 1s and layer 2s and stuff like that. So really cool to see Arbitrum just getting more support from more ecosystem partners out here. I would wager that Anywsap's going to be supporting Optimism and Starkware and zkSync and all of them. Like, I mean, I maybe they're already supporting Optimism. I'm not sure. I haven't checked lately. But generally, they're not going to just stop at one protocol. This is the thing about like the maximalist mindset, where people kind of like call me an ETH maximalist, or they'll call me an X maximalist, or they'll say, "Oh, you're this particular layer 2 maximalist." And it's like, no, I mean, it's just such a bad way to think about things. At the end of the day, developers are going to build what they want to build. They're going to deploy their apps to where they want to deploy it, and that depends on like various factors. And yes, okay, one of those major factors is having like an allegiance or an alignment to Ethereum's core values and mission. But I don't think that's maximalism. So in the same kind of vein, I don't think preferring one layer 2 over another is maximalism either. I think that there are going to be a lot of layer 2s that eventually fail because they'll just fail to get adoption. But that doesn't mean that these bridges have to say, oh, well, I'm not going to support Optimism because I think Arbitrum's going to win. No, they're going to support all of them, and then whatever wins, wins. It's the same that happened with all of these projects deploying to all the EVM-compatible networks like BSC and Phantom and a bunch of others out there. That's a shotgun approach, and as I've said many times, developers aren't going to be able to maintain protocols across like 20 different, apps across like 20 different protocols. It's just not going to happen. So eventually, over the long term, we're going to coalesce around a handful of these layer 2s and layer 1s, but the bridges don't have to be opinionated about this. The bridges are just going to be on everything and just like bridge assets and value for whoever wants to bridge them between whatever they want to bridge. So yeah, anyway, cool to see Anywsap supporting Arbitrum here. So Reddit is apparently selling 3 Ethereum NFTs featuring its Snoo mascot here. So Reddit's actually been a pretty good supporter of Ethereum over the years, and its co-founder Alexis, who now works at a fund, basically has said before that he holds a lot of ETH as well. But it's still really cool to see that Reddit's getting more involved with the Ethereum ecosystem. If some of you remember, they did like a scaling Ethereum hackathon a while ago, and they've obviously done their kind of like community points. It was Moons and something else. I can't remember the exact name here. And they've done donuts before and things like that. So, and those things were ERC20 tokens, I believe. But now they're doing NFTs. So you can essentially buy 3 legendary NFTs here of their Snoo kind of like mascot. which I think is pretty cool. I think these are going to go for a little bit. Obviously owning an official Reddit NFT is a pretty big deal. And, just on the NFT front, actually, generally right now, it's just so funny to see how different some of the communities are. I am talking to people and meeting people who give zero shits about DeFi. Like, I am telling you right now, they couldn't care less about DeFi. They have zero interest in it. They don't want to learn about it. They don't want anything to do with it. But they are absolutely obsessed with NFTs, to the point where they're just spending all of their day on it, all in every day, whether it's buying them, researching them, curating them, making their own, doing stuff in the metaverse. There's people doing this as like basically a full-time job, while completely, ignoring what's happening in DeFi because they just don't care about it. But this is the beautiful thing, is that that's Ethereum. You can completely ignore one kind of, use case and do another one. And this is what separates Ethereum from like Bitcoin, for example, where in Bitcoin, if you don't like BTC, well, then what are you going to do with Bitcoin? Like, you can't do anything else. You have to like BTC, the asset, and because that's all Bitcoin gives you. Whereas with Ethereum, I've mentioned this plenty of times, there's $1 million to get into Ethereum. I mean, you could love layer 2 stuff. You could love building layer 2s and being a dev there and kind of doing the research there, but you could also absolutely hate NFTs. I mean, there's plenty of people I know that actually hate DeFi, but love all the other aspects of Ethereum, or hate NFTs, but love the other aspects of Ethereum. I mean, it's insane to me, like, how diverse the Ethereum ecosystem is, and no one is forced to like anything. Like, you don't even have to like ETH as an asset if you don't want to. And believe it or not, there are lots of people out there who really don't like ETH as an asset and don't believe that it should be investable. I mean, I'm sure some of you have seen some of the FUD around 1559 recently. For some reason, people are coming out and being like, 1559 is just like something for the moon boys to pump ETH. It's such a stupid take, but I've talked about this before, and I'm not going to go into it now. But essentially, these people are still in the Ethereum ecosystem, right? Just because they don't like 1559, they don't like ETH as an asset, doesn't mean that they're kind of like exiting the ecosystem. Now, some of them will. Some of them may find homes in other ecosystems, and that's fine. But I think just the diversity of Ethereum is an incredible strength that not really any other platform has at this point in time. So yeah, really, really cool to see that, and cool to see Reddit issuing these 3 NFTs on Ethereum here. So Yield Protocol announced their Series A funding round yesterday. So they raised $10 million in a round led by Paradigm, with participation from Framework Ventures, CMS Holdings, Variant Fund, and DeFi Alliance, among, I'm sure, other investors here. So for those who don't know, Yield Protocol, or Yield, I guess it's called, is a DeFi protocol for fixed rate borrowing and lending. They have their V2 going live soon, and this funding is to kind of build out that V2, which is going to extend their protocol to new use cases by enabling new collateral assets and new borrowable assets here. So you can read this kind of announcement in the YouTube description, and you can also visit Yield Protocol's Medium page to read more about how Yield Protocol works and how they do fixed loans and why fixed rate loans are important and all the sorts of things like that. So congrats to the team here. Really great to see another Ethereum native DeFi app raise some money here. So the new version of the POAP mobile app is now live. You can go to poap.xyz/iOS to check this out. I don't believe it's available on Android. I think it's only on iOS. Maybe it is on Android. I'm not sure. But anyway, this new kind of like update comes with, I think, some performance improvements maybe, or something like that. I'm sure there'll be like some kind of like notes here if I open up the website here. Some kind of like changes. Yeah, so enhanced welcome screen with an internal FAQ page, city illustration pages, and resolves to ENS by address, which is really, really cool as well. So yeah, if you have the POAP app on your phone, be sure to download this. I mean, I think that you all should have it on your phone because POAPs are just absolutely awesome. I love collecting them. I'm sure a lot of you, are aware of this and love collecting them too. But actually, for those who aren't aware of what POAP is, it stands for Proof of Attendance Protocol. And what essentially they are is like little NFTs that you can get for attending different events, whether that be online events or in-person events. So for example, if you go to like a DevCon, you'll get a QR code that you can scan on a piece of paper, and that'll give you the POAP, and that'll basically prove that you were at DevCon. Now, you can extend this to basically everything. You can online events, offline events, but participating in different things on protocols. There's been POAPs for that. There was a POAP for being a Genesis validator in ETH2. And, I think the point is, to eventually get it to the point where you can basically use POAP as a governance signaling mechanism, where if someone has a lot of POAPs and they have a lot of the rare and coveted ones and the older ones, it signals to the rest of the people that they're an OG, so to speak, or they are a real human and they kind of like are involved in these things. They've been around for a while. So yeah, I really love the POAP project. Definitely go check out their app if you haven't yet and start collecting your POAPs here. So finally, Arthur0x from Defiance Capital announced that they now have a job board on their website. And this job board covers basically all of their portfolio companies. So all of the companies that they've invested in, which currently includes 37 companies, and there are 80 jobs here. So I've spoken about this a lot lately, where I said that this is the absolute best time to get a job in crypto. No matter what your proficiency is, no matter what you're good at, you can get a job. Developer, marketing, business development, community, design, whatever it is. Like, there's a million jobs out there, and you can legal, whatever. Like, there's a corporate counsel lead for Gitcoin right now. There's a senior front-end engineer for Strips Finance. There's project managers for Diversify. I mean, there's so many kind of like jobs available, and this is just another way to find them. And I've shilled cryptocurrency jobs.com before. Definitely go check them out as well. But generally, this is, I guess, more of a like targeted kind of approach here, where if you kind of like know of Defiance Capital and you trust that they're really good investors, then you may want to work for one of the companies that they invest in, which is what you can do here. So yeah, go check this out if you haven't yet. It'll be linked in the YouTube description. And that is it for today, everyone. So thank you again for listening and watching. Be sure to subscribe to the YouTube channel if you haven't yet. Give that video a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks, everyone.